what's going on to the AMC stock family? Yes, I know many questions right now regarding what is going to happen on Friday, September 17th. But wait a minute, we do have a lot of FUD spinning around right now, as it always does when the price of AMC decides to slightly drop. And when I say slightly drop, we are not in a situation where AMC is hovering around the $30 price range. We are out of that box, but now people are still, again, trying to call a lot of fear, uncertainty, and doubt. And here is yet another example. Here is where we're going to talk about Citadel yet again. So let's just get started because your time is extremely valuable. So let's just get right to the chase. Now we have two stocks that I'd avoid at all costs. And this person right here decides to say that sooner or later, reality will set in. The tone is already extremely negative, and he really does set his point right off the bat. And so he also mentions more key points, and he says that one is a brick and mortar retailer trying to pivot in a digital world, and the other has lost its place in consumers' minds as an entertainment option. He's talking about AMC in this point and GameStop in this top point. And he says that pay attention to businesses instead of the stock prices. A very controversial topic, just because on one side, people are saying focus on the fundamentals, where on the other side, people are saying focus on the movement. I'm focusing on the movement, and the fundamentals is actually getting better and better. So I'm not sure why when people mention the fundamentals of AMC, they do not acknowledge that it is getting better, especially from last year. Now that Benjamin Graham once said, in the short run, the market is a voting machine, but in the long run, it is a weighing machine. It means that sentiment drives stock prices at any given moment, but over a span of many years, the price will reflect the actual value created by the business. In some form, that is cash. Now here's also where we get into another controversial subject, because in my opinion, if AMC's fundamentals are getting better slowly but surely, I think that don't worry about the stock price, it will go up. But he is saying it in a different perspective. He's trying to say that AMC is not and will not get a good fundamental balance sheet, and so therefore the price will deviate away from its current price standpoint because the fundamentals will get worse in the future, and so therefore that will pull AMC down as well in the long term. So it's very interesting that we have very different opinions. Now in the past few years, it has felt like emotion is permanently behind the wheel. In some cases, it is difficult to find a rationale for a stock price that confirms to reality. Everyone has their own list of stocks they would avoid. GameStop and AMC. Okay, so here's where he states his opinion. And AMC are on mine. And these are the two stocks that he's talking about. Here's why and whether they could end up justifying their current prices. So right off the bat, I'm pretty sure he's going to say everything that is going to be opposing AMC and GameStop. So let's first talk about AMC first, and then we will get into GameStop because I'm actually interested to what he says about GameStop as well, because don't get me wrong, AMC stock family, whatever happens to AMC, that is going to affect GameStop. And whatever happens to GameStop, that is going to affect the AMC share price. Not as a company, not as a balance sheet, but definitely because they have a direct correlation. Whatever happens to one equity, the other one will follow. Now, he starts off his statement by saying AMC is in an arguably more difficult position than GameStop. That's actually very interesting. Now, movie ticket sales have been trending down for decades. Global ticket sales fell from 1.3 billion in 2019 to less than $250 million last year. Here's where we get into the prices, 1.3 billion, and he really does emphasize this throughout the rest of the article, and he repeats it again with this 1.24 billion. Let's hear what he has to say about this time. So he says that it showed up in the financials, or in other words, the balance sheet. And so AMC only generated 1.24 billion in revenue after posting 5.5 billion in both 2018 and 2019. This is actually pretty bullish to me, and this is actually more positive rather than negative. I know that the author is using it in a negative way. However, everything that happened last year because of the economy, I wouldn't really use that against AMC. Instead, I would see this about how they used to get 5.5 billion as their strong suit, and now they are slowly but surely getting their way back there. And so the company lost $39.15 per share. You would never know it looking at the stock price. Okay, so again, he is trying to say the price of AMC and the fundamental balance sheet are deviating away from each other. And that is simply because he says that the stock price is so high right now that you would never know that it is actually losing that $39.15 a share. And not only that, remember, he does say that AMC only generated 1.24 billion in revenue, and he directly relates this to that 5.5 billion in the previous consecutive years. And after falling almost 80% from 2017 through 2019, shares have now climbed almost 2,100% year to date. They were up even 2,850% at one point in May, and unlike GameStop, there's no business model transformation to hope for. So now I understand why he said that AMC is in an arguably more difficult position than GameStop, and that is because in his opinion, he really believes that there's no business model transformation to hope for. Again, this is the fear of the uncertainty and the doubt These are the types of situations that Citadel and a lot of these hedge funds, they want you to know of. They don't want you to know about the good news, which yes, we will be talking about the good news in just a few seconds. Now, even if the company returned to the 2019 levels, which is at 5.5 billion, a year in which it lost $1.44 per share, the current stock price will put its price to sales ratio at 4.4. That's nearly 4 times higher and 30 times where it ended in 2019. AMC does have a few things going for it. Okay, so finally, we do have some positive catalysts. Let's see what he has to say. Now, first, it has unapologetically raised capital by selling its inflated shares. Okay, so maybe this isn't all positive after all, because he does say that the shares are definitely inflated. However, he does also mention that they did raise capital, and what is raising capital going to do? In the beginning, many people believed that dilution was bad. However, dilution really does build up the AMC balance sheet and the AMC company, not just the stock price, because the stock price will probably go down. Whereas Adam Aron, the CEO of AMC, he knows what he is doing. He's just going to put all that dilution back into the company, which is actually bullish and positive. And cash on its balance sheet is up nearly 500% from the beginning of the year. This is exactly what I'm talking about. I didn't even know this. Up 500% almost from the beginning of the year. That's absolutely phenomenal for AMC. And to the company's credit, when it sold shares in June of 2021, it told investors the stock price had detached from the business and actually cautioned against buying the stock unless they were prepared to lose all or most of the investment. The stock is down 26% since. Well, he is actually acknowledging that Adam Aron, yet again, he is doing what is best for the company, and not only that, he does also mention that Adam Aron was trying to help the AMC investors by telling them, wait a minute, and he was actually very different from a lot of these other investors and a lot of these other CEOs, because he even told the AMC investors and the AMC stock movement that this is going to be risky, but don't get me wrong, with great risk comes great reward. This is something that many will tell you, and probably even the author of this article. I'm not sure why he doesn't mention that in this article though, but nonetheless, let's just continue reading. He says that with management essentially telling investors not to buy the stock, it's difficult to see how AMC can ever return back to life. Even then, life wasn't so great for shareholders. That was a lot of negativity, but now let's start to finally talk about some more positive catalysts. But wait a minute, right now I'm just going to quickly mention that Citadel Advisors, this also does add on to some negativity, but this will quickly change. On August 17th of 2021, Citadel reported a 48.1% increase in their selling position for AMC. And so some may say, how is this positive whatsoever? The more people that decide to sell AMC, the better and the higher probability of a short squeeze 2.0. We have yet to have another short squeeze 2.0. And the reason for that is simple. The reason why we have not had another short squeeze 2.0 or just another short squeeze in general is because we do not have that same situation where there was less market manipulation. Over here, there was barely any market manipulation. For instance, there was only people selling AMC in large quantities because quite honestly, they didn't think that they needed to even decide to manipulate the markets. And furthermore, they did not believe in the AMC movement whatsoever. That's why they believed it wasn't even necessary to try to manipulate the markets. But once they started realizing how powerful this movement was, that's when they decided to not let AMC go above $53 a share. And actually, it wasn't even just 53. It was at $60. That was one resistance level that AMC had a lot of difficulty breaking. And then not only that, it was also this level right here, the $53 a share level. So $53 and $60 both respectively, they're the ones that are extremely difficult to break. And it's not just because the day traders, it's because many institutions, many hedge funds, they cannot afford to lose again. And so what it's going to take at this point, if AMC wants to go up, we need one of two occurrences. Occurrence number one is Tesla needs to go down. It's not just Tesla though, I'm talking about the general market. So remember, when I say Tesla, I'm talking about the S&P 500 because generally that is representative of the entire market. Because on the day that Tesla is up, and remember, Tesla is just one of the examples, AMC is down. And so on the day that AMC is up, Tesla is down. When AMC went to this point right here, that $53 a share, Tesla dropped from $740 to $708 a share. Is this a coincidence, or can we use this to our advantage to understand when AMC will have a short squeeze 2.0? And it's not just that. So that was occurrence number one. Occurrence number two that we need for AMC is we need the volume to go back up. We cannot continue to have this deflated market where the volume is kind of lowering. Right now, we need the volume to go all the way back to these levels before, because now with even more manipulation, as you guys just understood, Citadel has, or they increased their position in selling AMC by almost 50%. Now we need AMC to have even more volume than ever before. So those are the two occurrences that I believe need to happen for AMC. And remember, I'm not a financial advisor, but I do trade AMC based off those two levels and based off those two occurrences. Not only the Tesla, but also the volume. Volume determines price action, which is why, in my opinion, volume is one of the best technical indicators. Now with that being said, AMC stock family, thanks again for watching. I'll see you guys next video.